The election results are in, and Canada is coming to an end. JG Francoeur is leaving the country for the next 4 years. I'm leaning into being my most stoic self.
On this episode, we talk about the election, the results, real estate investors, the economy. What is this going to mean for housing, and how is it going to impact you?
Welcome to episode 63. Let's rein it in.
Let's do it.
So if you were disappointed by the election results, give us a thumbs up. Put it in the comments. Liberal, conservative, where are you at? How do you think things went?
All right, Patrick. Well, listen, I've decided I am taking the next 4 years off. As you can see, I am wearing my vacation shirt, and I've decided I'm taking the next 4 years off. You guys can deal with the Liberals, and I will see you in 4 years, and we'll clean up the mess after that. How's that sound?
Sounds perfect.
Where are we going, buddy? Where are we going?
Okay, well, I'm thinking Croatia personally, but how about you? Are you going back to Timmins or what?
No, that's not far enough. I don't know. I might just circle the globe. I mean, I may just not stop. I don't know. I've always wanted to. I've circled the globe many times in an airplane, but I always thought, it'd be cool to kind of just leave from Toronto and just fly around the world and not stop, just keep going, right? And just maybe stick in the airports. I don't know. It just sounds like fun. But you know what? I gotta say that I have not spoken to my wife about this plan, so I should include her before we make any final decision.
Well, as long as you and River go, I mean, he's all in.
You know what? Cancel the plan. I didn't even think about River. He is not going to be okay on an airplane. It looks like I'm sticking it out. All right, let's get into it, Patrick. Election results are in, and I don't know. What's the right word to describe it? Depressing? I mean, you're being stoic. You're being very good right now. I got to say, I'm impressed with your ability to keep it together. I thought that Patrick was going to lose his noodle. In fact, when I didn't hear you yesterday, I was looking at my text message before I went to bed at midnight last night. I said, I'm going to look at my text message. I got nothing from Patrick Francie, and I thought to myself, man, he's lost his shit. He has lost his noodle. I thought maybe he even jumped in your own pond. I thought, did he jump off the bridge? What's going on with Patrick right now?
Well, I just got back from Alberta from a great event. And of course, in Alberta, there's no worries. We don't have to have conversations about the Liberal government. We can talk about them. We can complain about them. But I just looked at it and go, something, at the end of the day, I'm not going to give my power away, my energy away to a government that I don't align with or agree with. The good news is, if there is any, is that at least now we have a government, in spite of the fact that he was originally unelected, he's now elected. And maybe there's some direction going forward, the good, the bad. At least we know the game we're going to be playing. We're going to lose our rights and freedom of speech. We're going to lose whatever the bill is around guns, and we can't have any. And of course, we're going to save the climate. We are going to make sure that Canada is the leader in climate change initiatives, which probably means we're going to cap or shut down the oil and gas industry. I'm worried for Alberta, because this is just Trudeau on steroids.
I was actually going to talk about that. We'll come back to talking about Alberta specifically, because I know you're Mr. Alberta, and you and I are actually going to be in Alberta speaking at an event in 2.5 weeks, and we're going to have to address this crowd. So we're going to get back to that in a second. But I will tell you from my perspective, Patrick, I'm disappointed with the results, but I am glad it's over. It was literally Monday afternoon. I was in a meeting. It was Friday afternoon. I was in a meeting with some business partners, and we were talking about the real estate environment right now, and we were talking about how deals that lenders typically jump all over. I mean, it seemed like everyone was frozen in fear, and I have really not seen. And I'm typically I operate really well in those conditions. But man, the environment in general is becoming so kind of frozen, and everybody is so struck with uncertainty that nobody's doing anything. And it's even getting difficult for me to operate in that environment, because the whole environment is frozen. So it's not just certain players are frozen, the whole damn thing is frozen. And I'm curious to see if it starts to thaw a little bit. Just not the fact that I think this is a great result. I don't think this is the right result for Canada, but it is at least some level of stability. And some people obviously will prefer this versus Polyev, not my choice, but hopefully it starts to thaw the market and we can get back to business here, because man, confidence is an all-time low. People are just stuck. And I hope that we, at least now that this is over, we can get back to business?
Well, I think, what I like about us doing these segments is that we can go back and we can check, were we right, were we wrong? But at the end of the day, for the past probably week, I've really checked out of any kind of social media X. In any election, there's so much toxic mudslinging and conversation and real polls, false polls, conspiracy theories. I just checked out of it. I literally did not look at the results of the election till probably 8 o'clock Pacific time. And it's not that I'm not interested. I just didn't want to be drawn into, again, all of the stuff that's going on. So here's where we are. I think fundamentally we've got a minority government with conservative, or with the Liberals. Conservatives have a little bit more power. Danielle Smith out of Alberta is being very, very vocal. She is standing up. The NDP are still going to be the sway. I don't know what happened to Jagmeet Singh. I think he may have lost in his riding. I didn't even want to take the time to check it out. That's the bottom line there. But here's the thing about it, JG, is that as much as we're through the kind of uncertainty of government, now what people don't understand is because they were voting against the emotion of Trump, because Polyev maybe didn't stand up, take a stand, all the things that he did wrong, he lost the election. You and I have talked about that a little bit. But at the end of the day, sadly, we are going to see more capital investment leave this country. That's the bottom line. People are not going to come in, like businesses, corporations. Money is not going to flow into Canada, mark my words. And we're going to see some very, very big inflation.
It's
the climate change initiative.
Let's talk about that, Patrick, because it seems to me, and I don't want to go too deep down this rabbit hole, but it seems to me people miss that point about government, that if business isn't successful, if entrepreneurs aren't successful, if corporations aren't successful, and if money in general is leaving the country, that is less jobs or no jobs for everyone else. And it seems like that's a missing point. It's like those basic economics were not taught to people. And all they're concerned about is handouts from the government and more social programs, when in fact, that's not how you live. You live by having a great place to work and having a great wage. And that all happens with investment coming into the country, not leaving the country. And that's the thing that really disappoints me about the whole thing is I know the end result of more liberals, and that is more social programs, higher taxes, more everything that impacts that cohort negatively. And the very people that vote for them, they are the ones that pay the biggest price, quite frankly. And I could show you tons of examples of that. But I mean, listen, they made their bed. Now they're going to have to lie in it. It's not going to affect me because I create my own economy, period. End of story.
End of story. So, all of what you said is true. And there is a fundamental breakdown of understanding. And for some reason, there's so many that still think the government is going to save them. And they don't realize that we're paying for it. It is going to be significant increase in taxes. So as much as we think, well, inflation is under control, well, we step over the fact that taxflation is real. We're experiencing it, and we have to pay for these government programs. We have to pay for the government bureaucracy. And I mean, let's face it, a lot of the votes that Liberals got came from immigrants or who are beholden to the government for all of the subsidies that they have and the benefits that they get by being a landed immigrant. Not being critical of it, but it's extensive. And they're not voting because they understand policy. They're voting because, I owe it to this particular government that let me into the country and is subsidizing me. Then you have the government bureaucracy, the public sector that is bloated. It's necessary, but not a bloated necessary. And we're going to pay for it through taxes or taxflation. That's only one aspect of what's happening. So I'm really concerned. I don't love their policies in any way, shape, or form. I don't like them in any way, shape, or form. And it's a concern. Now, having said that, our job, rein it in, Real Estate Investment Network, you and I as leaders, as entrepreneurs, as real estate investors, as business owners, provide some guidance, lend out some confidence in how to play the new game, because this is going to be a new game and it's going to be challenging, and we better be mentally, emotionally, spiritually prepared.
I think the next couple shows are going to be really around that topic of how do we play the new game. And I haven't been spending a whole lot of time. I frankly didn't think Carney was going to win, so I wasn't spending a whole lot of time preparing myself and my next 4 years of thought. because I'm not going to go on vacation. Despite I'd love to go on vacation for 4 years, I wouldn't last 4 days. Well, I'd last 4 days, but I wouldn't last 4 weeks. That's for sure. I've tried it before; it doesn't work for me. But that is what we have to do now as real estate investors and say, okay, what are the next 4 years going to look like, and how are we going to play this game? So let's talk about a couple different things, Patrick, that do impact real estate investors in a big, big way. What do you think happens? I'm going to talk about Alberta in a second, but in general, across the country, what happens to house prices, Patrick, in your opinion, in the next 4 years? I have my opinion. What's your opinion?
Well, we talk about it often, which is the regionality of housing prices. But let's go back a little bit. So I think there's a very good chance that we're going to chop sideways for a while in many sectors. So, let's break it down. When you look at property types, we know that the condo market is going to continue to melt down. And I'm saying it's melting down. Toronto, Vancouver, we know that. It's going to continue to melt down. It's now melting down in Calgary, Edmonton, very, very soft and getting softer. Montreal is kind of designed for what it is. It is all, when you talk about Quebec, that province in general is a renter province. I think we're going to become a renter nation. Things are not going to get more affordable. Housing is not going to get more affordable. What the fundamental breakdown with many is that understanding and monetary policy. We've been beating that drum for 4 years. Definitely, I've been hitting it way hard for the past couple of years, and understanding that under the surface, we have quantitative easing, which means more money is coming into the market, and that's only going to crank up by the end of 2025. Mark my words. That means all asset prices are going to inflate. That's what it's going to look like, but it's really the devaluation of our dollar. We've had that conversation many times. So my view of real estate, we look at the condo market, it's going to continue to get soft. We look at housing in general, it'll go sideways with certain blips in different regions. And then the multifamily sector is still of concern because of the overbuilding. You have to be really strategic in that. So that's my kind of overarching view of the world. Is that helpful?
Now, Patrick, one of the things that we know we can expect from a Liberal government is going to be, more taxes, more regulations, more hoops to jump through, and less building. Despite their bullshit promises, there's going to be less building, and there's going to be, and we actually have an interesting stat on this, on, what is the expectation as time goes on in terms of, new builds. And that for the next couple of years, that's going down. There's going to be less new builds every year. So the supply of new builds to the market is only going in one direction, and that's down, given the fact that, monetary easing that you're talking about, the devaluation of the currency, the fact that supply is going down. And even though demand is not necessarily going down, yes, we're bringing in less immigration than we did at the peak a year or two ago. Demand for housing is still strong. So the point is, Patrick, is that I see the same thing. The house prices in general are going to be trending up, and yes, they're going to chop sideways. We've got to get through this tariff war and so on and so forth. But once these things stabilize, we will see prices accelerate. And the good news is, for investors that already own real estate, your real estate is going to be worth more than it is now in the near future, which is fantastic for you. For those of you that want to get into real estate and want to buy a home and want to get into real estate, it's going to be tougher for you because the price of real estate is going up. So it may be a good entry point. You might want to think about that. That's my thoughts on it, Patrick.
Yeah, and I agree. And I think there's a couple things that, in terms of giving guidance to existing investors or those who are going to continue investing in real estate or get into the game. It's still a good game to play. I think it's a better game to play now than ever because there's less clutter in it. So in other words, there isn't everybody being a real estate genius, and you're not getting multiple offers, and you're not competing against a bunch of investors. So this is for a, sophistication level, which means that you're taking the time to gain the education, understand what goes on economically. Because here's the thing, JG, and I was giving people this warning in Alberta just in this past weekend. And I want to say it's a warning, heads up. There's a responsibility that we have as investors, as business owners. And that responsibility is to not only our capital partners, perhaps, but to ourselves in terms of how we look at real estate. Now is not the time, JG, to be over leveraged. Now is not the time to, go in at, 95% loan to value unless you have backup cash, because there is going to be a softening. We're starting to see a pullback in Alberta, in a softening of rents and demand. So this is going through that transitional phase. But for For small developers like yourself who have been in it, who've been setting yourself up, putting your team together, you're dialed into a specific strategy. And I think small developers like you are going to freaking crush it, especially if you stay focused and pay attention to what's going on from a financing point of view and from a liquidity slash cash flow point of view. Huge opportunities.
I want to, I thank you for bringing that up, Patrick. And actually, I want to give some real numbers here to give people a sense, because you're absolutely right. There's a lot of developers often lever up their projects in a big, big way. As you talk about 90%, 95%, a lot of them lever up over 100% sometimes to get the deals done, which is a very dangerous place to be. And just to give everyone a sense, and hopefully this is helpful, Patrick, but like at Visture, I keep our portfolios right now somewhere between 50% and 75% LTV. Like, we're very low leverage right now. Why? Because it's not the time to be taking on a ton of debt risk right now. Now we're being very strategic, but in general, that's a very safe place to be at. It's actually under leverage because I could be generating much better returns for myself and for our portfolio if I was to lever up. But the point is you have to weigh those. Risk returns kind of thing, and that's important. So I just wanted to give some numbers so that people can have something to anchor to.
Well, it's a really great point. And for those who are still interested in investing in real estate, don't want to get into the trenches, do it yourself, or do what you're doing. For example, if you're investing capital, if you're looking at a REIT, if you're looking at an LP, any type of capital investment into the world of real estate, you have to look at the framework for which you're investing in. Is the REIT that you're investing in, what is their LTV? What is their cash flow? What is their plan? It is so important to do your diligence, because real estate is still a great game to play. It requires right now some real serious focus and, I guess, insights into what is the operation of that particular, I'm going to use the example of a REIT or an LP. I don't care if you're doing or you're investing as a capital partner into a development. Somebody's building a fourplex or an eightplex. You have to look behind the scenes, look at the balance sheet, look at the financials, look at the plan, and make sure that you're not jumping into an over leveraged scenario. Very, very risky. Now's the time to be conservative. And okay, go ahead.
No, I was just going to jump in and say, Patrick, again, hopefully, the people that watch the show, I'm hoping that these numbers, and I just wanted to be transparent with the numbers, because it gives people hopefully some hope to say, okay, it's not as bad as people think. Because this year, I just finished my year end, by the way, and on my personal portfolio, my personal and my Visture portfolio, let's say I got a couple portfolios, but my Visture portfolio, so we had our worst year ever. Okay, worst year ever in 12 years, worst year ever. And this year we did 11.3% return on investment. 11.3% this year. It's my worst year ever. Typically I'm 25% plus typically, but this year 11.3%. But if I compare that to the S&P real estate index that did 1.2% this year, I'm pretty happy with my performance at 10 times the index. So, but that's the numbers. But people say, oh my God, real estate's fallen off a cliff and so on and so forth. I still did 11.3% ROI, and I would have had much better returns, Patrick, if I would have had more leverage on my portfolio. But like I said, I wanted to keep the leverage low in order to keep the risk low. So those are the real numbers. So hopefully it helps people.
Yeah, and you're looking at it from a place of risk management, possibilities and probabilities, and now's the time to be conservative. Something that I was sharing in Alberta as I'm looking at what's going on in Alberta, Edmonton and Calgary specifically, but even Red Deer, Lethbridge, Medicine Hat, Grand Prairie, all of what I'm seeing is saying we have to look into the future. This is the critical shift of how we view real estate, JG. We talk about it, but I'm going to continue to emphasize we can't look at what's going on today. Alberta is going through their cycle. Edmonton's coming out of a boom cycle. We don't know how long that's going to take, but now's the time to look at your existing tenant profile, look at your existing tenants. Maybe they got 4 or 5 months left in the lease. Maybe you nudge them a little bit. What's your plans? What's your thought process? Oh, hey, I'll tell you what I'll do. I'll lock in your rental rate for the next year if you sign a 12-month, extend your existing lease by 12 months today. So lock them in. If you've got good tenants, you like them and they're paying their rent and you want to keep them, my suggestion is extend it now. Now, some won't agree with that, by the way, and that's fine. For those of you who are conservative in terms of your thinking and want to make sure that you're mitigating risk, we need to look into the future. And the future of Alberta is some of those regions, some of those property types are going to continue to get soft. Pay attention, because in a boom cycle, we're all geniuses.
Okay, we're jumping to Alberta next. Before we do, though, Patrick, I'm hoping, we're watching the consumer confidence very, very closely right now. Small business confidence, consumer confidence. It's at an all-time low. Shit, it's even lower than it was during COVID, which is depressing. Um, Now, I'm hoping that this starts to rebound a little bit, even though, like I said, even though we're not happy with the direction of the election, a lot of people are, and a lot of people in that, there's good, those people may be in a position that could create some confidence for people, and hopefully this starts to rebound, because we know that the economy goes where this indicator goes. If it starts to rebound, we will slowly start to follow it. And I think this election was part of we got part of the issue, and we had to get over that and through it, and now we are. And the next thing is now we got to get through the Trump tariffs and all that various stuff and stabilize that situation so that we can get back to business, and then we'll see where we go after that.
It's going to continue to remain a very soft 2025. This doesn't change quickly. And that's the key. There's such a big lag. So even if there's some consumer confidence come in, important to Canada, because it's a huge part of what drives our economy. Consumers consuming. We're not a productive country. We've beat that to death. We have to accept the fact that we are not a productive country. We are driven by consumerism, and for the longest period of time, we are driven by real estate. And JG, there is a slide that shows just what percentage of our economy is driven by real estate, and then we connect it to the fact that real estate is off color right now, which is going to really impact the job market. And the job market has been very affected in the Toronto, Vancouver area, and it's going to expand from that. So consumerism has to come back. Real estate has to gain some flavor again, and that's going to take a long time. So we're going to continue to be very soft.
Yeah, very good point. Let's talk about Alberta real quick, Patrick, because obviously we're going to go speak there in a couple of weeks. So I'm excited to see what the flavor is down there. But let's talk about Alberta. How do you think this change of government is going to impact? And is it going to be more of the same? I mean, it's been 10 years of this crap. So is it going to be more of the same for Alberta specifically? I did hear, and I thought this was very fascinating. I heard an advertising on radio that talked about not purchasing stuff from the US and the Trump tariffs and all that various stuff. And what's interesting is I found out that the ad was actually from Enbridge, who said, if you don't want your gas to be imported from the US, go sign this petition, or they had some call to action kind of thing. I thought that was interesting because they're leveraging, the whole Trump tariff thing, the whole tariff thing, with hopefully having some cross-Canadian gas pipelines. And this was specifically for Enbridge, which is natural gas. So, but back to Alberta, what are your thoughts on this?
Well, I think the federal government is going to put their emissions caps and on the industry. Danielle Smith's going to push back hard. There's going to be a constant battle between Alberta and the federal government to the degree that they can push back, and Danielle Smith can say, I'm not drinking that Kool-Aid. The talk of separation, a lot of saber rattling, perhaps. Will anything come to fruition? Probably not, but it's going to continue to have that level of uncertainty. If we continue to push the climate change initiative and the emissions caps, it is going to slow the oil and gas industry down. What many in Ontario and Quebec do not understand, they're totally unaware of the fact that the billions of dollars that Alberta generates for the rest of the country, given the rest of the country economy is very slow, is shutting down. I don't know how else to explain it, but ultimately this is going to be what's happened. It's going to be still very, very political. There's going to be all the mudslinging. They're all debate. I don't know if we're going to move forward at all in 2025, to be quite honest with you. And that sounds pretty pessimistic, but it's hard to be optimistic when you start to see how things will now unfold, because it is a continuation. And I say it's a Trudeau on steroids, and the direction that Carney will take this country, I think it's in question.
Yeah. You know, Alberta for the last, 4 or 5 years has been driven largely by obviously a rebound in oil, and a diversification of their economy, and Alberta in general has done phenomenal at that. I mean, that has nothing to do with the government. That has everything to do with Alberta as a province doing what it does best and diversifying its economy. And I think that part's going to continue, Patrick. But if they could have continued that and had oil as a wind in their sails and had immigration, which is what's been happening for the last 5 years, it's interesting to see what's going to happen because immigration, I think, is definitely slowing down. Do we have a slide on that, Patrick? Is the immigration going into Alberta specifically? Do you expect it to continue to slow down? Because it has been slowing down. Where do you think it goes in the next year, 2 years?
Well, there'll be, the interprovincial migration will continue to the degree that it can continue. And yes, I've got a slide on that, by the way. So ultimately, the interprovincial migration will continue as it has, but it will slow down. And the reason it's going to slow down is we're going to see that job market soften. And depending on where you enter the job market, so if you're really educated in IT and engineer and you've got those talents, yes, that's going to be okay. The service sector, not so much. So the affordability and the lack of affordability, primarily in Ontario and British Columbia, will in fact drive people. It already is, and it's going to continue driving people to Saskatchewan, Manitoba, and Alberta.
I don't know. I mean, okay, maybe let's actually talk about that, because Saskatchewan, Manitoba, yes. I mean, listen, the affordability there compared to Alberta, Ontario, BC is off the charts because it's very, very well priced over there for homeowners for sure. And there's some great cash flow to be had as well for investors. But if you compare Alberta pricing, and if I put it face to face with a similar size city, Alberta pricing has gone up so much, and Ontario pricing has come down, where we should do a slide on that, Patrick, because I think it's much more even than people realize. You can buy a house in Oshawa for about the same price you could buy a house in suburbs of Calgary or suburbs. Edmonton's lower. Edmonton's different, but I was referring specifically to Calgary in my mind.
Yeah, but you can't compare Oshawa, quality of living in Oshawa compared to Calgary. Close to the mountains, big open blue skies. You've got Banff, you've got
the old dirty Oshawa. Of course you can. Shit, it's the best over there.
No, you can't. And so the point, you make a good point, but I'm going to point something else out that people forget. And if you're in Alberta, you don't buy this. And we've had these conversations before. And whenever I go to Alberta, I joke about feeling like I've just come to a provincial factory outlet, because everything is so much less expensive in Alberta compared to British Columbia. And I spend a lot of time in both provinces, so I have a real comparison. Gas, I saw gas in Edmonton, I think it was $1.17 or something. I filled up last night here in Abbotsford, and I'm going to say I paid $1.49 or $1.54 or something. I don't know, some number
That's
like
cheap.
that.
That's cheap for you guys. Usually $2 with the carbon tax.
Going, woohoo. Now, I don't know what's gas prices like in Ontario right now.
It was, I'm not kidding, last week it was $1.08, which was incredible. It has gone up a little bit now. It's like $1.22 right now. I'm buying diesel for $1.24. Which is wicked. Let's keep that up.
Well, there's a reason for that, and that is that oil prices are falling right now, and that's because China and the rest. There's a lot of, given what's going on a global scale, and we need to touch on that in a minute. But let's go back to pricing and housing. So fundamentally, Alberta is still relatively inexpensive compared to Ontario and British Columbia, overarching. Secondly, the weekly average income of Albertans is the highest in the country still. And we're not paying a provincial sales tax on that. So ultimately, there is more disposable income when people move to Alberta. And that's why they're moving to Alberta.
Patrick, are you trying to tell me, Patrick, that when there's less taxes, people are more prosperous? Is that what you're trying to tell me right now?
Affordability.
Wow.
At the end of the BC, bring cash, so that's the joke around here. But ultimately, that's what we see. So British Columbia, Manitoba, Saskatchewan, and as from an investor point of view, let's face it, JG, you are us. You've got a property management company. Visture does lots of property management. It's like you have you got handcuffs on compared to what happens in Alberta, Saskatchewan, and Manitoba with just landlord tenant rules. And ultimately, you guys like British Columbia, rent controls, didn't that have an impact? Gosh almighty, how are rents in our provinces, BC and Ontario, and the relationship that we have with our tenants? So it's ridiculous.
So sorry, Patrick, are you saying that more regulations actually hurts renters? Is that what you're saying? Holy shit. It's kind of like someone should have said this before the election. Sorry, I digress. I was supposed to be calm about all this. Let's get back to the show.
The government's going to save everybody. So let's get back to the show. Where were we going with all this? So real estate.
Alberta, where's Alberta going here in the next year or two?
I think, well, listen, I think that we can't look a year or two down the road. I think we have to look 6 months down the road, and then we have to say, okay, given the trajectory of where it's going, I think real estate within Alberta is going to remain strong. I think that property types are going to keep hammering on that, is very, very important. You and I have talked about it before. Multifamily detached, so whether that's a duplex, triplex, a fourplex with an ADU, a duplex with an ADU, that coach home, that laneway home, whatever, verbiage you want to give it. But ultimately, we have to maximize the rents on any particular project that we have and that we buy into. So all to say this, we have to get our capital to work. If you have it in the bank, I can't stress enough. Yes, we need liquidity. I encourage that. But tying up cash or leaving cash in a bank is the melting ice cube. It is literally losing value at a record pace. So we have to keep that in mind.
So Patrick, where do we want to go from here? Do we want to touch on the economy in general? We want to talk about the housing market? What do you want to tackle next?
Well, I think that we have to look at, real estate sentiment overall. So I do want to go back to something that I think Carney's platform was. I just quit listening to him. I got tired of it. But it's the continuation that the government's going to build 500,000. And I think the language they used was housing units, not houses, it's housing units. And so you have to kind of unpack that and go, well, what does that look like? Number one, a housing unit is different than a home. I think it's an important distinction. So that can sound a little conspiracy, but I'm telling you that we have to consider that. And anyways, it doesn't matter. There's not a hope in hell that the government is going to build 500,000 of anything. Our average has been 240,000 for more years than we can count. And ultimately, that's the maximum that we're going to hit. So that side of it, we're not going to overbuild. That's not going to be a thing. And you know that if the government starts building housing units, can you imagine the cost of that? So we've got that to look forward to.
I just hope that they don't undo some of the things the provinces have been doing, because the provinces and the cities, like Edmonton, I know Edmonton's doing the 15-minute city thing, but some of the planning policies I'm doing more and more research on Alberta and what they're doing, but some of these cities are taking their own development into their own hands, and that's helping a lot of these cities. So what I want investors to understand that what the federal government can do is quite limited as it relates to housing. They can pave the path, they can draw the vision, but what they actually can do is actually quite limited, Patrick. So I just want people to know. And it has a lot to do with regulations. It has a lot to do with taxes. Those two things, they can directly impact, or they can influence the provinces to influence the cities. But that's it. I mean, the government doesn't build houses. Let's be very clear.
They can't pull it off. And so for investors, the level of sophistication is to understand the economic development plan of any city. JG, you know what's going on in Peterborough. You know what's going on in a lot of the areas that you invest in. You pay attention to what the economic development plans are. What are the city plans? What is the direction that they're going? And understanding that is so, so important. So you have to take your level of sophistication and diligence and play the game, because it's a necessary part of staying ahead of what is coming and creating that financial future. So let's stay grounded in that. I think that we have to understand that we are now into the direction, I believe, that we are going to be a renter nation. And I say that because when we look at housing sentiment, when we look at affordability, what the issues are around inflation. So even if younger people with a dream of owning a home one day who are decent income, the cost of living, just aside from housing, just the cost of living is taking away from discretionary income, their ability to save money, to save up for a down payment. All to say this: immigration is coming down in terms of out of the country immigrants coming into Canada. But what is increasing is the fact that affordability and those who want to be a first-time home buyer are now having to be renters. So as rental housing providers, we are actually going to see an increase in rental demand from those who just simply cannot afford to buy a home.
So it was in 2015, Patrick, that I remember Rain talking about a renter nation and how this would become a renter nation. And the switch has been quite incredible. How many renters we've added compared to home ownership just in the last 10 years. And I guess the point I'm trying to make there is nothing's going to change. We're just going to have more of that. And like in the last 2 years, Patrick, you and I have talked about it to ad nauseum, how there's an incredible level of tenant out there today that really should own a home, but they can't own a home. Therefore, they end up renting, and they make phenomenal renters for us who are providing housing. Again, more of that. That's just going to continue. The same show we've been seeing is all going to continue, in my view, from this perspective. You agree with that?
I agree 100% with it. And here's where, if I was to sum it all up in kind of where I see things, is that when we look at the individuals that are out there, there are those individuals who are going to curl up in the fetal position in their basement and hope like hell something changes. There's going to be those individuals that walk around going, I think the government is going to save me. And then there is going to be the top performers, the top percentile, which is always the case, JG, who are going to take the time to gain the knowledge, have the courage, get the confidence to actually take responsibility for financial futures, paying attention to the ability and their learning to invest in things like real estate. And I don't think real estate's the only thing to invest in. We've talked about that many times. There's other options. The point is getting your money to work because you've taken the time to understand monetary policy and how we have no choice. It is destined today to continue to devalue our currency, fiat currency, including the US dollar, by the way. And whether that happens in a year, 3 years, 5 years, we don't know. But we do know when we invest in hard assets, the upside for us is that our money holds value as we exit at, let's say, 10 years from now. So that's the kind of my belief.
On that, Patrick, the conversation that you and I had with Jeff Booth, the price of tomorrow, all of that stuff, I actually see this. I think that trend was inevitable, what Jeff talked about, but I did think that if Polyev would have won, I think that trend could have been, let's say, extended. That runway would have been extended. I think now, frankly, I think this all happens a whole lot sooner. And I think all of those things that we talked about that are going to happen, if people should go back, we did a YouTube interview with Jeff Booth. Gosh, it's been 3-4 years now, Patrick. But all that stuff we talk about, in my view, all of that gets pushed forward because of this result.
100%. And I think that, with a different shift of government would have come a shift of trajectory. None of this is a fix the problem overnight. This is, we are here where we are at. And a lot of this is, I think that we have to look at the global macro. We can't ignore what's going on in China. We can't ignore what's happening with Iran and the discourse, if you will, with Ukraine and Russia continues, and the fight between East and West, and what the U.S. is doing and trying to bring manufacturing back to the U.S. will mean that prices are going to continue to go up. But the breakdown in the war right now is already limiting supply. The early reports are that many of the ports, fewer ships coming in, fewer cargo ships coming in, and those cargo ships coming in are lacking. They're not full like they were in the past. So this whole tariff war, and the economic war that's happening is going to affect us. It's going to affect our costs, and we're going to continue to see inflation. Is that going to all happen tomorrow? It doesn't happen that way. That's our job, is to look into the future and see the trajectory. I use that example. If you hit a golf ball 1 millimeter out at the tee, it doesn't, it's the trajectory shifts, and it's, at 300 yards or 250 yards, it's in the other fairway. And that's what we've got going on. It takes time for that to happen, and we have to anticipate where it's going.
And that's a great point, Patrick. And we just want to remind everyone that these changes typically have a 12 for real estate, have a 12 to 18 month window. That's how long it takes for this to hit the real estate market. And we've had a ton of changes, Patrick, in the last little bit. So, the decisions they are making today, and the tariffs and all that various stuff, that has a 12 to 18 month lag. So you're going to deal with that next year. And some of it you're going to deal with this year, but you're going to deal with it until next year. That's the better way to say it, is you're going to deal with it from now until next year at minimum, and then some. And that's important, Patrick. I'm glad you brought that up.
Well, I think, let's just validate that. Let's just give a really clear example. Think about March 2020, shut down, changing all of these policies, all of the things that happened. They locked down the country. A lot of that now, 2 years later, 2.5 years later, when things start to open up and we get going again, we're just now feeling the impact of a lot of that. Like, it's just literally showing up now. It's just to show that it is the trajectory that shifts, and there is a huge lag, and we're still paying the price for that. So, that now the pendulum is swung one way, it's going to start to swing the other way, and this is what we're up against. So we have to continue to look at it from that perspective. Lag time. It isn't panic. It isn't overreact. It isn't being emotional. It's just connecting to the data, looking at past trends, risk mitigation. I think we keep it pragmatic. That's what we have to do.
Well, Patrick, I think that was a great show. We talked about, obviously, the election results, and specifically what are going to be the impacts on real estate investors, the housing and the price of housing, the impact on the supply of housing. And the fact is we're going to see this ripple out over the next 6, 12, 18 plus months. And all I got to say is there's going to be many good shows ahead.
JG, I'm off to do my meditation now. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.